Good afternoon, November the 25th, 2014. And here we sit, trading sideways in the E-mini. We came in this morning with an upward bias. We had 65, 67 as a possible buy. We had 63.50 as potential support. Stops beneath that would take us to 60 to 62, which was buy 2. And we came down just to 62.75. We talked this morning, the easiest trade in the book was selling failure to take out and hold the previous high at 72.75. They got up to 73. Couldn't hold it. Beautiful retest failure. Just had everything line up for the short side. So you were short in this case in the 70-50 area. First stop was 65, so plus 3 to 5, depending on how you put that trade on. Leaning against 65 right here. You were long in the 66 to as high as 67. If you took that trade, that's not a good trade for us because we're making until we get right here off of this B. And if you'd gotten long right here, minus, if you were nimble, a scratch. But here's your mean green trade, which is really the trade to take. I mean, we crossed the entire value area. You don't have a compelling case to get long right here because of the magnitude of the selling, because of what we're seeing right here. So the next trade is to get short. The mean green trade popped up. In this case, you're short in the 68 area. We trade down to 62.75. Now we get a higher low, and we're into our second buy zone, and this has a lot more appeal, and we still have selling down to these 2 bars by the 50-lot trader, but starting right in here, they start to cover their shorts, and then the market eventually trades back up, and they get stops above 70. Triple, quadruple top in here. Market trades back, really dead over lunch. Comes back up, dies, we get some volume to the downside, but we aren't able to break it. So right now, if we're going to guess at close in this market, we're going to close this at 2068. So we had a good day of trading. We caught the market. This was the trade of the day. It was seen early. We knew what was coming. And when we look at the F6 screen, right here, and let's sell off the top. Here's the high on a 3-minute chart. The selling takes off right here in the screen bar with a 20-lot trader. The ticks are still mixed. The ticks are selling into the opening. The 50-lot trader was short in this area right here. The 20-lot trader, you can see, started to sell in here right before the opening, then added to it. So we had really good information off this screen that the market had some selling oomph behind it. So where do we go from here? Again, I just, you know, I know I sound like a broken record, but if you had to make a trade at the market, you'd be long. I mean, you've got all of this behind you. This market is pointed up. It's not a comfortable trade because we're high, but remember back coming into the sell-off in 2000 and 2003, momentum buyers. That was a big you just have to know how to buy new highs. We're kind of in that same situation right now. So this one says higher high, higher low. It's still okay to get long to see if we can take out this high. Now, if we don't take out that high right there, then we can look at the short side. What do we have in our F2 screen, which is where the exchange members play? And again, inside the congestion area right here, it's leaning B. Looking at the shape of the profile, you've got the point of control over halfway up. This congestion area looks like a P. This B print up here, these single B prints, if they hold, definitely can say we've rejected prices above 70. So looking at this screen, sell failure to take out 71.73. And then I really think if we take this out, we're going to have a shot at 80. 75 obviously is a round number, but 73.25 is so close to it, I believe it comes out. So we'll put sell 2. I think we'll see this in the night session. I don't think we'll see the second one in the night session. On the buy side for the night session, 65 plus or minus. And then 60, 61 for buy 2. Lots of news tomorrow. Lots of news. Durable orders, minus a half. Ex-transportation, plus a half. This number will be the focus. It would be supported. Jobless claims, 286. A default number comes in every week at that. I don't think people are paying a lot of attention to jobless claims given, especially tomorrow with all the extra news. Personal income, up 0.4. It's a little hard to believe given the job market right now. Personal spending, up 0.3. Getting close to the holidays, that could be Christmas, that could be true. Core, unchanged. Consumer sentiment, 90. And Michigan sentiment number is probably the smallest sample size study that's done, but it's a surrogate for the stock market. New home sales, 470. Existing home sales. The housing numbers come in mixed. Some are better than forecasts. Some are, that's pending home sales, plus 0.6%. And then crude inventories. That only the crude traders will pay attention to. OPEC meeting is going to make tomorrow's inventory report pretty meaningless. So durable orders ex-transportation, personal spending, consumer sentiment, and the housing numbers. I'm not going to put a lot into that, but those numbers can drive the market. And then there's Black Friday. And the seasonal tendencies of the market to rally tomorrow, get pretty quiet after lunch tomorrow, and then rally on Friday, which will be a truncated season. Okay, the correct roll date for the financials is Friday. Some people, so when you go to bed tomorrow night, be sure to go to the March contract in the financials so you'll have it come Thursday morning. Markets close at noon Central. Nobody will be playing the bond market. The stock market will probably be where all the action is. I'm not saying bond traders keep bankers' hours, but it's pretty close. I mean, when the large banks are closed, there just really isn't the liquidity and interest for people other than like us to play. Okay, very, very strong 5-year auction. There's really 2 plays going on in treasuries right now. One of them is the dollar play. Everybody expects the EU and everything else to be lower. And so you can get long treasuries on the idea that the dollar appreciates. The second one is the lack of collateral out there for repos, and that is a problem. It adds a great deal to the expense of balancing your books every night, which the banks are required to do. They got to mark to market. They got to do all sorts of things. That's really not a bad thing, except if they choose to recategorize their treasury paper. So on the F1 screen for the note, higher. There's buyers. Higher low, higher high. It's the way we do it every day. I don't change anything on that. And right here, I always come in and I do a split for the auction, which is an I split. This market is pointed higher. We've got a new extension up in L period. So L period stops at a half. We're going to make 27.01, 29 by 1. And then our 21 to 25, which is really where we ended up today. This trade is to sell failure to take out 8. I think we get through 8, 12 to 16 is the next resistance. So 11 to 15 will be sell 2. I don't see us getting to that second number overnight, though. They can't take this market straight up. You got to have some back and forth, and that will tend to give us a chance to buy into weakness on the assumption that tomorrow's auction will be done at a higher price than today's. Okay, if you are not taking these trades, you have to sit down and you have to, if you've been with us for 3 or 4 days, I know some of you always come back and say, wow, how do you make these calls? Well, we make it off of structure. We make it off of known behavior of the various segments of the market. We're able to put it into context with the news. But about 80-85% of the information comes straight from the market profile. It's pretty objective. We're not really putting our opinion on it. It's which way is volume moving through time. And you can see right here that volume is moving higher through time. So this market favors the buy side. Okay, we're going to sell failure to take out 43, 43.04. And then 7 to 11 for sell 2. Don't think we can make it to our second level based on the overnight session. We have a breakout from basically 20. We're at 29 right now, so I'd like to buy the 21 area. 21, 25 will be buy 1. Buy 2, 13 to 17. Okay, gold. Gold's probably in a holding pattern right here. Like I said, I'm going to talk about when I came back from lunch. Couple of different takes on the gold market. One guy that I was out with has mining properties in Alaska, and it's a placer operation, which is done with hydraulic suction, pulling up a lot of material, but their cost is about $600 an ounce. When you look at some production costs of gold out there, the mines that are brought on later and later, it's up around $1,200 an ounce. So right now we're kind of looking at break even for some gold producers. And the price of gold at $1,200, he'd like it higher like it was, but it doesn't really bother him, because his cost of production is at $600 an ounce. The fellow that buys gold and silver coins didn't really care what the price of gold and silver was, as long as he was able to buy some. So I asked him, do you ever plan on trading out of it? No. I'll pass it on to my kids. So it's a core foundational piece to a lot of people's portfolios out there. It's not done to trade. It's kind of like when you see these pictures of these Indian brides-to-be or Indian wives that they have gold, from their collarbones up to their chins. And whenever they can buy some more, they add to that. they it's not something they're going to get out of unless it's just a dire emergency. Well, frankly, Bart, it didn't come up, if you know what I mean. But, you know, if they confiscate gold and you're a gold producer and you got a gold mine, you're in pretty good shape. If they confiscate gold and you're an individual holder, I mean, that'll make gold more valuable if that happens for the guy that produces gold. If the government comes in and steals all your gold from your own personal holding, it's just another form of government theft that governments are really pretty good at doing. Okay, I'm going to put a question mark here at 95. But I think we got a 1200 plus and a 90 minus market. So we're really most interested in buying this 90 area right here. Then, of course, 85, 87. I think tomorrow's market trades sideways. I don't see anything that says it's going to trade higher. Famous last words, I know, but I can sell failure at 1200 to 1205 area. What would you think about that executive order back in 1933, Bart? Obviously, you're not going to keep your coinage in a lockbox or locked up, right? And you're going to destroy all the receipts that you have. You're going to try to make a cash transaction someplace and keep it on the QT, right? So, maybe. I mean, that would be my inclination. And there are some of us that have weaponry that goes back before all this registration stuff, too. Those are pretty valuable guns if you think about them. But that would probably be the last one that you'd want to sell. Gold was whacked today off of statement out of Venezuela. I'm surprised. I'm not surprised that the market sold. I'm really surprised it didn't sell yesterday. And I think what is happening is that the market's telling OPEC they better cut their production quotas significantly or the price of crude oil is headed lower. The supposition about Saudi Arabia, obviously Russia and Iran suffer right out of the chute on this. There probably aren't any 2,000, 3,000, 4,000 acre leases being done right now to tie up property in these shale areas, but most of that play is already behind us. And you know, I tell you this, on the renewals, the prices, if the price of oil is here, will be done at a lower price than it was done originally. Kansas got up to about $2,000 an acre, but the structure here is not amenable to fracking like they can do in Bakken or down in Texas. So it's a smaller structure. So leases here are back to normal, which is a straight oil play. But it makes it cheaper to drill here now than it does in other places. Easier to raise the money. It's a more economic deal. Okay, we're below 74. The last rotate up stopped at 74.45. Then we have a J period high at 64, and we've got an I period high at 90. L stopped at 19, so it's aggressive, 74.25. The danger I see in being short crude, we're selling into the hole right here, is that the OPEC announcement will come probably when the markets are closed or early Friday morning. So we are selling into the hole. Might be some room left in London to push it down one more time, but short covering is, I think, a bigger bigger play. I'm going to make 73.50. Actually, kind of prefer the long side down here on a one-day basis, and then 7,300 plus or minus for buy two. And last but not least, the euro. Wow, what a strong market we had today. I got tied up on the phone and didn't find out what piece of news pushed us. But 125 plus, 124 minus is our market. So sell one, 25 plus or minus. Might take a 80 to 90 to get in, don't know, but I'd like to do it against 125, and then our 15 to 25, picking up this area over in here. Last, we had the spill in London from the other night. So I'm going to lean against 125 even and 125 and a quarter. On the buy side, 50 to 60, I really would much rather be short here. And then our 20 to 30. And that's it for November the 25th, 2014. I will see you all bright and early in the morning. I hope you have a great evening. We might make 50 degrees here today. Seasonally right now we're supposed to be 50. Hopefully this warm air laden with moisture drifting north will bring us some moisture when Sandy and Reg and the rest of them share their excess cold air with us. Takes warm air to create rain and weather, and cold air is the trigger. Y'all have a great evening. I'll see you at 6:45 a.m. Central Time, give or take. I'm out of here.